autonomous taxi platforms, we believe globally will deliver by 2030 $8 to $10 trillion in revenue. Shortages about GPUs or anything.
Before Nvidia became popular, Cathy Woods, Ark Invest CEO, had been buying it at $4 back in 2014 and rode the wave on this specific stock to $330 back in 2021. The latest rally she had missed was because of the flagship Ark Innovation ETF, in which she sold out her major stake back in January. But if Woods was so positive about Nvidia, why would she do that? Subscribe to Finance Professor and keep watching to know why Cathy Woods sold her stake and why she cautions investors on Nvidia's big rally. Who is Cathy Woods? American investor and businesswoman Cathy Woods is the founder and CEO of Ark Invest, an investment management company that emphasizes technical developments and disruptive innovation. Woods attracted a lot of attention and admiration for her upbeat look on cutting-edge businesses and cutting-edge technologies. Several exchange-traded funds, or ETFs, with a focus on the fields like genetics, artificial intelligence, robotics, and autonomous vehicles are managed by her company, Ark Invest. So now, what is Nvidia? Graphics processing units, or GPUs, and other related technologies are the focus of the American technology business Nvidia Corporation. Products of GPUs, which are essential elements in several applications like gaming, professional visualization, data centers, and artificial intelligence, or AI, is Nvidia's main area of concentration. The GPUs produced by the firm are well known for their high-performance capabilities and are frequently found in workstations, personal computers, and gaming consoles. In an interview, Cathy Woods stated that she and her team, have always been quite enthusiastic about Nvidia. She claims that they bought it at a discount when it reached nearly $100 in the fourth quarter of last year, and that it later tripled as some of the other AI-focused companies stood still. They were examining the 25 times sales of Nvidia as well as Tesla sales as they examined the relative valuations of brands in the AI industry. Woods says that, unquestionably, Nvidia is a fantastic business with significant technological achievements and a commanding position in several important areas. Their GPUs have been at the cutting edge of innovation, powering sectors like gaming, data centers, and AI. Undoubtedly, this achievement played a role in the rally they saw. Tech investor Cathy Woods says that she's hesitating to embrace AI darling Nvidia because the company's shares are now too expensive. The chip maker is priced ahead of the curve, the Ark Invest CEO stated, suggesting that the stock is too overvalued to be good investments. The stock price of Nvidia has significantly increased during the past few months. It's crucial to note that many variables, including the rise in demand for graphic processing units or GPUs in industries like gaming, artificial intelligence, and cryptocurrency mining, have contributed to this boom. Boom and bust. Wood may also be concerned about the boom and bust nature of the chip sector. On Friday, the tech investor said that she was worried about the shortages. Tesla is coming up with its own chip meta platforms. Google their own chips for more specialized large language models. In an interview with Bloomberg, "I began thinking about the cyclicality of a group," she said. Chip companies are suffering from a slump as the sector corrects for chip shortages in 2020 and 2021. Consumers are buying fewer PCs, smartphones, and other consumer electronics, suppressing the demand for the chips that power them. Manufacturers and retailers are also selling off excess inventory stockpiled during the chip shortage. Nvidia reported a 38% year-over-year fall in quarterly revenue from its gaming sector, indicating that the company is still suffering from the consequences of the chip downturn. However, the firm now blatantly views artificial intelligence as its future, with CEO Jensen Huang presenting a wide range of new AI services, products, and collaborations on Monday. Among these was a new supercomputer platform to assist huge tech companies in developing the next big thing in artificial intelligence, like ChatGPT. Tesla. Woods said that the investors are wrong to think that Nvidia is the only AI player. Electric car maker Tesla is the most obvious beneficiary of the recent breakthrough in AI, she tweeted, referring to its investment in automated driving. At the MPW Next Gen Summit in May, Woods referred to Tesla as the biggest AI play out there, in a talk with Fortune editor-in-chief Alison Shontel. The investor claimed that Tesla may be in a pole position to take the lion's share of the worldwide market for autonomous taxis. At iEast in the US, he estimated that robotaxi platforms might be worth $8 trillion to $10 trillion globally. Elon Musk, the CEO of Tesla, predicts that the business will introduce fully autonomous driving this year, which would boost sales enormously. However, the National Highway Traffic Safety Administration declared the beta version of the business's entire self-driving software to be a crash risk and requested a safety recall, forcing the company to halt installation earlier this year. Woods argues that at 6 times the revenue, Tesla stock is far cheaper than Nvidia's current 25 times revenue valuation. The valuation. It's a critical aspect to consider when analyzing Nvidia's stocks. The company has experienced a significant increase in its stock price, but it's essential to evaluate whether the current price accurately represents the company's fundamentals. Overvaluation can result in potential risks, particularly if market sentiment shifts, or in other words, Nvidia's current stock price should be scrutinized to ensure that it's safe for investing. We're just over halfway through the video, so what do you think of the video so far? Subscribe to Finance Professor to know all about the reasons why Cathy is cautioning investors on Nvidia's big rally. The competition. Being a big part of a highly competitive industry means that the technological disruptions can pose a potential threat to Nvidia's position in the market. To ensure that Nvidia stays ahead of its competitors, it's important for the investors to stay closely and monitor the competitive landscape. Regulatory risks. As technology companies gain more influence, they also tend to face increased regulatory scrutiny. As a result, investors should be cautious of the regulatory challenges that Nvidia may encounter in the future, as these challenges could impact the company's operations and growth potential. Therefore, it is crucial for investors to stay informed of any regulatory changes that may affect Nvidia's business. Market volatility. The stock market is known for its unpredictability, as the prices of stocks can be greatly affected by sudden shifts in investor sentiment or in the broader economic conditions. Therefore, it's important for investors to adopt a long-term perspective when it comes to the stock market and to be prepared for a potential market fluctuation. This means understanding that investing in stocks involves risks and that it's crucial to have a stabilized market position. Supply chain changes. The current state of the global semiconductor industry is marked by significant supply chain disruptions. The situation has the potential to impact Nvidia's capacity to meet the increasing demand for its products. Inevitably, these challenges could result in a delay in meeting consumer needs, increased cost of production, or worse, a loss of market share. As such, it's crucial for Nvidia to come up with a mitigation strategy that will enable them to continue producing their products. Diversification of investment. Investing your money in a diverse range of sectors and companies is considered a wise strategy. Although the possibility of making significant profits through an investment in Nvidia is appealing, it shouldn't be the sole focus of your investment plan. Putting all your money in one place can lead to unnecessary risk and reduce returns. Spreading your investments across different areas and industries can help you to reduce the potential impact of individual stock performance on your overall investment portfolio. As a result, diversifying your investment portfolio can make it more resilient. In conclusion, although Cathy Woods pointed out some potential risks, Nvidia's excellent reputation and strong potential for continuous expansion are still noteworthy. However, before taking any action, potential investors should be carefully reflecting on and examining multiple factors. In particular, they should assess Nvidia's current valuation, the level of competition in the industry, the cyclicality of the industry, and the importance of diversification. In doing so, they should seek expert advice from a financial consultant or conduct ample research on their own. As a technology company that has reached the pinnacle of the industry, Nvidia stands out as a highly attractive and enticing investment opportunity. However, investors must weigh the risks and potential rewards before making any investments in order to make informed decisions. And that is all for today. Did you find this video informative? If you've got any suggestions regarding the topic of the next video, mention it in the comment section below. Subscribe to Finance Professor, press the bell icon to never miss a video from us, and if you enjoyed the video, give it a like.